Welcome back. Now, China's central bank has unveiled its biggest stimulus since the pandemic. This in efforts to pull the economy out of its deflationary funk. But what will it really take to get the economy back towards the government's growth target? Ahead of product at Prescient China, Tian Pan joins us and now with more insights. Thank you so much for your time, Tian. Now, I remember for a lot of last year, there were complaints that the Chinese government is just not coming out with a bazooka-style stimulus. Is this it?
Yes, I think the answer is quite simple, and it may even be something bigger than a bazooka. So we like to call it almost China's equivalent of a whatever it takes. So everything that's been announced has far exceeded market expectations, including our own, and everything is extremely positive. I think the only thing to just be wary of is quite a lot have still been rumors and unconfirmed, but not denied by officials here in China. But either way, very positive.
All right, whatever it takes. So what is the focus of this package and who stands to benefit the most here?
I think everybody that invests in China as a start, I think, but the ultimate aim of the stimulus policies is to lift overall market confidence and lift sort of confidence on the consumption side. So what we've said for probably 2-3 years now is that the Chinese consumer does not lack money. They simply lack the confidence of spending. We've seen savings rates absolutely skyrocket. And the last week will hopefully, with the stimulus measures, give consumers and everyday Chinese person the confidence to spend a little bit more of that savings, which will then help grow the economy.
Does the stimulus package, though, maybe signal some sort of panic or nervousness in terms of the growth prospects, particularly this year?
I think nervousness, yes, perhaps not panic. So we did see quarterly GDP numbers that have been announced sort of falling short of that 5% target that the government is aiming for. And the latest round of stimulus should help us achieve that. We saw various economists and investment banks, including ourselves, with a high expectation for 2024 overall GDP growth now. So I think everything is coming probably at a good time. Some may say a little bit too late, but rather late than never.
And actually, you talk about the, still disappointing GDP figures. What about on the inflation side? Are things still looking bad? And I guess maybe just linking back to the fact that the consumer just isn't spending?
So inflation is slightly improving, sort of above zero, but we are slightly concerned about core inflation, which is hovering very, very close to the zero mark. And producer inflation is consistently negative, which is never great for an economy. So I think, obviously, the stimulus coming through, hopefully, as you mentioned, spurring consumers to spend a bit more, to have a little bit of that demand pull inflation come through eventually. Right now, the sort of consumer confidence levels of spending are a bit depressed.
We also saw some sectors that maybe had cooled off a little bit. Of course, linking back to, the consumer spending, for example, luxury. And I know, obviously, there is also a move here to boost kind of confidence in the stock markets. In terms of what you've seen in the Chinese stocks, would you say that maybe the cheer is broad-based, or are there certain sectors that are maybe more cheerful than others?
We certainly think across the board, everything has done well. I had a quick look at the numbers after market close today. Since Tuesday last week, the onshore CSI 300 index up 26% in US dollar terms over 5 trading sessions. So absolutely impressive. The only sector that we've noticed a significant lag, also growing, but not as much as probably the banking sector. So the banks are expected to give up some of their profits to help mortgage holders or home loan holders save interest rates, which they previously didn't have to do. So that obviously affects their profitability, hence translates into sort of a slower growth than the rest of the index, as the rest of the index powered on 20-something%. That's probably the only sector we notice a bit slow growth.
Of course, we know that, deep into the core of the woes that we have seen in China are in the property market. Will this make any significant difference in the prospects of China's property market?
So I think it definitely helps stabilize the market. Our view is still consistent with before, is that the government is not going to stimulate to revive sort of the property bubble. The government understands that it's a bubble, but the bursting of the bubble needs to be controlled to maintain stability in other sectors of the economy. We've seen policies come out to stabilize the property sector itself and also industries that are highly exposed to the property sector. So, for example, your renovation contractors, etc. There's been government policies to come through to help with renovating old apartment complexes that are fully government funded. Things like that we are seeing. So overall, stable, but not a revival in the property sector in our view.
All right. Do you think that also this stimulus package, could be it, or maybe we could have more announcements coming still before the end of the year in terms of the government propping up the economy and consumer spending?
So one of the key standouts with the PBOC, the Chinese Central Bank's announcement this time, was that the initial 800 billion CNY of swap and lending facilities for the stock market was not the only one promised. So the governor himself said there could be round 2, round 3, perhaps even more. So it obviously left the ceiling open for further stimulus. We do expect more fiscal support. So what we saw from the central bank on the monetary side. So overall, I think one of the major positives is that it's currently not capped, and we do expect more to come through.
All right. Well, thank you so much for your time. And hopefully we will not see the end of that cheer anytime soon, because it also does benefit our local market here in South Africa as well.
Absolutely.
Yeah. Thank you so much for your time and for your insights there, Tian. That was Tian Pan, Head of Product at Prescient China.